Guys, welcome back to the channel, welcome back to a new video. Today is the day where we have been waiting for, the most important day of the week, because we have an FOMC meeting and the United States will most likely rise the interest rate again with 0.75%. But the most important thing is the speech after the rate hike. The rate hike will come through 7 o'clock Frankfurt, Paris time, 6 o'clock in the UK, and 2 o'clock in the afternoon New York time. Half an hour later will be the press conference, and that, like I said, is the most important, because the talk of the town is that a lot of people think that the Fed will start to quote-unquote pivot, to easing down a little bit, to become more dovish. I am not in that camp, and I will show you in a minute. This is the BTC USD price. We are going to dive in right away, but please do me a favor, like, subscribe, and leave me a comment or share the video with your friends if you think that's useful. Now let's get into it. Okay, first BTC USD. This is the kind of triangle that we're forming here, a little bit of a bigger time frame, and at the same time we're kind of having a trading range like this right here. That is kind of the box where we are in right now, and of course the question is if we are really following this triangle, or going to break to the upside or the downside, or maybe do we have a breakout or fake out. If we do break out to the bottom, the target is approximately 19,500. That is also here the sloping support line of this ascending triangle where we have been in already for quite a while. If we break to the upside, then our target is approximately 21,500. I think if we are breaking to the upside, 21,500 is barely in resistance. We probably go to 21,800 to 21,900 because we have a macro value area high and a FIB 78.6 right there. To be honest, guys, I think what is going to happen later on today is that we are going to maybe first have a dump, that is the 0.75% interest rate hike, and then maybe a pump, like a recovery. I think when the Fed starts to speak, that they say, well, you know what, in December maybe 0.5% rate hike, or that's what we expect. That's also what the broader market is expecting. We'll go there in a minute. Is that a lot of people then maybe get a little bit bullish, and then we are going to get a push to the upside. Do I really strongly expect that we go to 21.8? Not really. Like I said, I'm still kind of bearish. It still looks a little bit like a distribution, double top kind of pattern. We are already creating a high, a lower high, a lower high, a lower high. But you can also say, well, we're also creating a low, a higher low, a higher low. So yes, of course, that is the triangle. I get it. But on the macro, this still looks a little bit weak, and because we also missing the volume at the bottom. I'm not in a trade right now. I will most likely not trade until the news comes in. I have been looking at previous FOMC meetings and the volatility, and what I have found out is that the volatility becomes less and less over time. It is like BTC is getting a little bit resilient for these interest rates hikes, and I'm not, please do not be confused with CPI data, so real inflation data, but I'm just talking about really the FOMC meeting, because the 0.75 is just kind of already given. It's 100% guaranteed. It's kind of priced in. So I think once it comes out, then you just see a spike down, and then probably a spike back up. Like I said, a lot of people expect maybe the Fed to become a little bit more dovish, or to pivot. Now, to get this straight one more time, if they going into the future saying we're not going to do 0.75 but 0.5, that's not a pivot. A pivot is an interest rate decrease, not just a lower increase. Yeah, just to make that 100% clear. Quickly then to the dollar. I said yesterday, well, this would be a nice moment to bounce, and exactly that is what happened, and now we're kind of slowly grinding lower again. This would actually maybe set the base a little bit for BTC to go higher, but to be honest, I think in the next couple of hours we're just going to do some sideways action. Maybe we're even going to walk out here to the right, but just make sure that later on today that you have your level set. I would say wait for the news to settle in and then trade it. But if you really want to trade it, make sure that you have your levels marked to the top or to the bottom, but do not preset any orders, because if I am wrong and we suddenly just start bouncing up to the upside, or we're getting a bounce here and then go higher, or maybe the other way around, then you easily are getting liquidated for your trade if you are going long here. And then suddenly we just keep nuking down south or north. So if you preset your trades during such an event, there's a very big chance that you get liquidated or stopped out in a matter of minutes. So just make sure that you know what you're doing and what you want to see in the charts, what kinds of confirmations. S&P 500, nothing very new compared to yesterday, kind of chopping around here at that golden pocket. Again, the Fed interest rate hike, 78% of the people think 0.75% is the interest rate hike. So this is, I think, very correct, and this is what the majority expects, is pretty much given. And also the next one, 0.5%, is what a little bit less than half of the people is expecting. A little bit more than half is expecting now 0.5%. This was different yesterday. Also, this will switch a lot after the interest rate hike that will find place today. So this changes every day. But I do strongly believe that in December we're also getting 0.5 because there's 3 weeks in between, and that will mean within a month we have then 1.25% interest rate hike. And I think from that moment on the Fed will say, you know what, let's take it a little bit slower. Let's keep on rising the interest rates, maybe with 0.5 or 0.25. But we want to see maybe a little bit the effect in the future. I do not expect a pivot at all. Why? This is the inflation in the United States. We are slowly coming down from 9.1 to 8.2. You would say, okay, that looks good, so maybe we can ease a little bit. Remember, target is still 2%. But the core inflation, which is the CPI corrected for food and fuel costs, so this is actually going up, and I think the Fed will look more and more into core inflation. So this number of 6.6 needs to come down the next couple of months, and maybe once this is really coming lower, then I see them maybe easing down a little bit on rising the interest rates. Another important thing that I want to show you is the unemployment rate, record low, 3.5%. If we're looking at, let's say, the last 25 years or maybe even the last few decades, then there were only a few moments in time in the last 60, 70 years where we have been on a lower unemployment rate than at 3.5%. So the Fed wants that unemployment rate to go up. That sounds weird, but if the unemployment rate goes up, and yes, you're getting then most likely a recession because interest rates is being risen, housing market will come down, stock market will come down, but then the economy is cooling off. How many times in your personal surroundings, in the town or the city, wherever you live, you hear that it's so hard to find staff because it's hard to find staff and they're doing the most crazy stuff to get the right employees in. That is also signaled that the labor market is just very, very tight and very, very heating up, say, for the economy. So they want to kind of have that unemployment rate to go higher. Then the inflation needs to come down a little bit. Economic growth will go down, and then they'll say, okay, we're probably going to reach our goal now of 2%. So don't think that if this starts to rise to 4 or 4.5%, and right away the Fed will say, oh, well, then we're going to slow down the interest rates or we're going to decrease the interest rates. Absolutely not the case. Inflation getting down is the ultimate goal. I've said many, many times before, high inflation is complete destruction of Western capitalism. They want to get that out as soon as possible. They don't care anymore about your crypto, your stocks, the real estate market or whatever. Inflation needs to come down ASAP. So that is kind of what we're looking at right now. Again, to be honest, I hope a little bit of a spike up, and then maybe that reality sinks in, and then we're going down, because then we have also a beautiful 1, 2, 3 taps to the high and then lower. That will be textbook reversal. Now we finally maybe can make our way to 17.6. If we just start dumping down and there's no spike to the upside at all, it is just a bad news show. If we start closing daily candles underneath, let's say 20,000 to 19,500, pack your bags, it's over. And then we are definitely going lower towards that 17k. That is still quite a drop, but like I said, usually with these events it gets a little bit more volatile. If you are lucky, like when it comes down to the volatility, approximately 3 to 4%. In the most volatile FOMC meetings, I have seen spikes from top to bottom, approximately 8%. So then you kind of have an idea of what you can work with. That will be it for now. I will be updating you on Twitter in the meantime. Just be careful if you're not in trade, just let it go by, wait until it settles in, and then take your position, whatever is then your preference. I will most likely do the same. Maybe I will go live, maybe not, but like I said, I will definitely update you on Twitter. The link to my Twitter account you find in the description, also to my Instagram. Feel free to follow me there, and of course I would appreciate it if you would like, subscribe, click on the bell, click on all so you don't miss any future videos, and see you guys very soon again in the next one. Bye bye.